When people think about global tensions and defense spending, especially with everything happening in the Middle East right now, they usually think about companies like Lockheed Martin, fighter jets, missiles, aircraft carriers. But modern defense looks very different today. Some of the most important battles are happening in cyberspace, where governments, corporations, and infrastructure are all potential targets. That's where cybersecurity comes in. Today, we're going to talk about cybersecurity, not just as a technology, but as an investment theme. And to help us unpack this, we're joined by Ryan Issakainen. Welcome to the podcast, Ryan. How did I do with that last name?
Hey, Austin, you were pretty close. Missed a syllable in there, but otherwise you did great.
I figured if I say it fast enough, it'll be harder to mess up. But all right, before we dive in, let me read your bios. Ryan here is a senior vice president and ETF strategist at First Trust, where he's spent more than 2 decades helping investors understand the evolving world of exchange-traded funds and technology-driven investment themes. Ryan joined First Trust back in 2000, which puts him right in the middle of the earlier growth of the ETF industry. In his role today, he provides research and market insights on ETF investing and regularly shares commentary through First Trust's research publications, including their ETF Observations blog and ETF Data Watch reports. Ryan is also a familiar voice in the industry. He's hosted a monthly ETF webcast for financial professionals since 2008 and recently launched the First Trust ROI podcast, where he interviews strategists, portfolio managers, and economics about trends shaping the markets today. You may have also seen Ryan on major financial media outlets like CNBC, Fox Business, and Bloomberg, and he's been quoted in publications such as the Wall Street Journal, Barron's, Bloomberg, and Fortune. Ryan is a chartered financial analyst and holds both a bachelor's and master's degree from Wheaton College. Welcome to the podcast, Ryan.
Much appreciated. Happy to be with you guys. So
the financial markets were falling apart in 2008, and you were like, "Hey, you know what I should do? I should start a webcast."
Yeah, you know, when there's disruption in the market, when people are worried, that's the best to communicate. So, we got started early, and it's been pretty gratifying to have a platform that is fairly widely followed in the financial industry. And so we get a chance to, speak our mind and provide insights from people that are a lot smarter than me, and I get to ask them questions.
It makes a lot of sense. So, before we get into cybersecurity, let's just talk a little background. So when you were 8 years old and your aunts and uncles were annoyingly asking what you wanted to do with your life, like you'd even know at that age, ETFs didn't even exist yet. How did you end up with a career as an ETF strategist?
As an 8-year-old, I wanted to be a professional basketball player, and that didn't pan out for me. Turns out I wasn't nearly as tall as I needed to be or as athletic as I needed to be. So when it became clear that wasn't going to pan out, honestly, I've ended up in the financial industry somewhat by happenstance. I know I'm supposed to say that, I entered a business and economics program, and I studied and was single-minded in my pursuit of finance. That wasn't how it worked out for me. I was actually finished my college career as an undergrad and started work as a bartender. I, through a series of chance encounters, met some people that work at my firm currently. And that was, again, 26 years ago. So I kind of entered at the ground floor and have been able to learn and study as I went, and have built a career out of it. It wouldn't have been what I told my parents that I wanted to do when I was an 8-year-old, certainly.
From bartender to CFA, talk about the 2 different sides of the spectrum there.
That's right.
So let's back up. So for our listeners, who may hear the 3 letters ETF being thrown around here and there, can you explain what an ETF is?
Yeah, so an exchange traded fund or an ETF is the simplest way to think about it is a basket of securities, whether those are stocks or bonds or other sorts of securities related to commodities, or there's a lot of different assets represented by ETFs today. But it's essentially a fund, like a mutual fund, and it trades on an exchange like a stock. And there are several advantages related to the tax efficiency and the ability to see through what your investments are. There's a lot of transparency associated with ETFs. They tend to be lower cost in terms of comparisons between other sorts of ways to generate exposure to financial assets. But the industry has grown from 1993 was really when the ETF industry began to where we are today. And now there's something like 14 or $15 trillion invested in the exchange traded fund industry. So we've grown from a minor player in the financial world to something that has a big influence on markets.
Yeah, back in 2000, right? I think that's when it was basically just SPY and maybe one or two other things. Now, you mentioned, the size of the ETF market. There's literally an ETF for almost everything. Like everything, whether you want to track livestock, companies that align with your faith, even ETFs that get exposure to stocks believed to be involved in fraud. Do you think there's too many at this point?
I don't think there's too many. I think more choices are better than too few choices. I think as long as there's transparency in the ETF industry, as long as investors are able to know what they're investing in and know what they're paying for those investments, I think a free market rewards good ideas. I'm not going to be the one that says an idea is a bad idea and someone else shouldn't do it. That being said, at First Trust, we're very careful about the sorts of ETFs that we bring to market. We want to have ETFs that are long lasting. We plan to, anytime we launch an ETF, we plan for it to be around forever. We want it to fit well in the wrapper of an ETF. We want to provide transparency, and we want to provide expertise. And so if we can check those boxes, then I guess the last point we would do is listen to our customers, which are typically financial professionals managing client assets. Those are the ones that know what people are looking for, what they want, and what will be received well in the market. There's a lot of great ideas that just ETFs sit on the shelf and don't do anything because people didn't think about that last part, about where there would be market demand. And so they have this really complex and interesting idea that doesn't pan out because, well, nobody really wanted it. It was a solution in search of a problem. And we try to avoid that at First Trust.
Right. I guess let's jump into something that I've been hearing more and more people want, right? Cybersecurity. And let's start simple. So when investors hear the term cybersecurity, they might think of antivirus software on their laptop, right? That annoying pop-up that comes up that a lot of people don't even update. But the industry is obviously much bigger than that. How should we think about the cybersecurity ecosystem?
Yeah, it is much bigger than just simply your software that goes on your computer. And sometimes, it takes a while for your computer to boot up because all those underlying cybersecurity precautions are being taken. We think of many different aspects that different companies specialize in, ranging from the sort of data security and application security, with the protection of your email, detecting threats that might be embedded, identifying what could be maybe a phishing email from a cyber hacker or something like this, ranging to endpoint security. So we're thinking of Internet of Things applications. You want to make sure that your Roomba that's moving around your house isn't collecting data and providing it to some nefarious actor somewhere, but also thinking about your electric vehicle that maybe that's a more important aspect where you want to make sure that someone's not hacking into your Tesla and able to drive you off the road or something like that. We think of identity management, access management. You want to make sure that when you're logging on to your bank account or something like that, that it's actually you and it's not someone else impersonating you. And the bank certainly has some liability there as well. So they want to make sure that that's in place. We think of networking security, making sure that when you go onto a website, you're actually able to access it because it hasn't had a DDoS attack where there's bots, millions and millions of bots logging onto the website at the same time, and so it freezes things up. And you see that on occasion. Sometimes it happens organically because people are all kind of some websites not set up to handle a lot of traffic, and maybe there's a big product announcement or something like that, and so everyone flocks to that website. And it freezes things up. Well, that happens naturally sometimes, but it also can be a result of a hack where there's just millions and millions of bots trying to freeze up a website for that purpose. And we think about all the managed services and consulting associated with the cybersecurity industry, identifying vulnerabilities and trying to mitigate those vulnerabilities. So the ecosystem is not just simply what you see on your laptop when you boot it up. There's different aspects of it. And as I said, there's different industries, different companies that sort of specialize in that part of the industry. And so, we think it's a very robust ecosystem that has been built up over the last several decades as we've become more digitally interconnected and really everything has come online.
Sure. So in the movies and the TV shows where you get like the bad hacker versus the good hacker, and they're both kind of pounding away at their computer saying, oh, you just breached this, I'm going to try this. Is that really how some of these cybersecurity companies operate, or is that more smoke and mirrors to make good TV?
TV has to make things interesting, right? I think it'd be pretty boring if you didn't have the intense music playing in the background and someone, rapidly typing away at their keyboard. It reminds me sometimes of like when you go to an airline counter and they're like, oh, let me see if I can find you a seat. And they're just, or a car rental counter or something like that. But I don't think that's really necessarily what's happening. Today, a lot of the cybersecurity measures are done on an automated way using things like artificial intelligence. Many of these cybersecurity companies leverage AI resources to be able to scan for attacks that might be coming or attacks that are underway. They've built up massive amounts of data where they can, recognize something that might be coming and automatically respond to that. There's just so many cyber attacks that are happening on a minute-to-minute basis that it's not somebody sitting in a big room with giant screens. They're all looking around and typing away at their computer. It certainly does have some contact with people along the way, but a lot of this is done using resources like AI to respond and recognize attacks.
Sure. So would you equivocate it more to maybe the tools that you would use to stop rodents from getting into your house? You set the traps, you make sure all the doors are shut, type of thing, and then that's the protection there, or is it more than that?
Yeah, you certainly want to have those windows tight. You want to make sure that there's no holes in the foundation of your organization. To extend your analogy, to keep the rats out. But there's also got to be monitoring along the way. And I think, as good as you can update your code and make sure that there's no vulnerabilities, and there are companies that specialize in that, you really need to be able to, recognize when, somebody might leave the door open. My kids are constantly leaving the door open to the garage, and, rodents can crawl through. And the same thing happens with cybersecurity. People click on a phishing email, and that leaves the vulnerability open for somebody to get into your internal networks. And so there has to be the ability to ongoing monitor and respond to attacks and, take care of any issues that arise. Sure.
And you mentioned earlier that sometimes the cybersecurity programs can make restarting your computer take longer. I know our listeners missed it, but Ryan had to restart his computer, and he must have a Fort Knox cybersecurity system with the 15 minutes it took to restart that computer. How many stone walls and did you have to climb over, and moats did you have to overcome to get back into your laptop there?
It must have been a lot. I don't really, I'm not sure how many different things were running in the background, but I literally shut everything down and rebooted, and it took much longer than you would have expected it to. And I mean, literally, I only opened Word, and there were just so many different things running in the background. So I think it's possible that my equipment is in need of being updated and replaced. But yeah, there's a lot going on. And especially, you think about all the things that are happening in the world today, war in the Middle East, and there's a lot of tension. I think all the IT desks at First Trust, at your firm, everywhere are really on high alert. Nobody's sort of let their guard down. This is when everyone's focused on making sure that every single I is dotted and T is crossed with respect to cybersecurity.
Yeah, Ryan, just to add to that, it seems like it seems apparent, right, that institutions, companies are adopting more and more technology, and then you add the AI level on top of that on the hacker side as well. Hackers are also able to leverage AI to better their hacks. Just curious what you're seeing on the spend side, right? I would imagine with the increased adoption of technologies, then you implement AI on top of that on both ends, that companies and institutions need to spend more and more on cybersecurity to defend, better, more intricate attackers.
Yeah, and one of the interesting things when you look at revenue from the cybersecurity industry, we pay attention to the NASDAQ CTA Cybersecurity Index, and the companies within that index have continued for the last several years and are projected for the next several years to grow their revenue in sort of the 13 or 14% annualized rate. And the interesting part about that, when I look back and when I think about forward, it doesn't tend to be the cyclical sort of spend that you would expect from other forms of technology. It tends to be very stable. And that's because many of these companies have sort of subscription-based revenue, and it's non-discretionary revenue. It doesn't come and go based on sort of the whims of the IT desk. This is something that if you're a business operating today, if you're a government agency, most people, everyone needs to continue spending on cybersecurity because it's become the cost of doing business. It's not something that you can decide, maybe we're heading into a period of slowdown or something for our business, so we're going to trim spending in a certain area. Cybersecurity is at the bottom of that list. And so, we continue to see pretty steady revenue and revenue growth. And our expectation is that you may see revenue for individual companies drop and increase over time, but as a whole, the industry, we've seen very stable revenue.
Yeah, that makes a lot of sense, especially it being non-cyclical, a durable area of the market. To that point, when thinking about the broader software sell-off, right? It seems like cybersecurity stocks are kind of the baby that's getting thrown out with the bathwater, so to speak. I would think the barriers to entry in that space, right, to become a really powerful cybersecurity company is not, something you could do overnight. Artificial intelligence may quicken that, but could you speak to, what your thoughts are on the sell-off that we're seeing with cybersecurity companies related to software? What you're seeing there? Yeah.
I think the characterization of the baby being thrown out with the bathwater is correct, although it's kind of a disturbing image. I think software companies are at risk of disruption from AI. I think that's what's being reflected in valuations. People are worried about margins for those software companies getting compressed. And they have all these use cases in their mind of, some of the software that people are familiar with. They think about their client relationship management software, and, they pay subscription fees on that, and it costs, hundreds of thousands, if not millions of dollars per year for these organizations. And they think, well, if I can just use Anthropic's Claude code to create my own CRM software, maybe I can do that at a lower cost. And so then they start thinking, well, what other software could be disrupted? And, the cybersecurity industry is also in the software sort of bracketing, that category. And so then they start thinking about, well, what about Claude Code security? Could this do something similar? And that's where we see this downward pressure. And we'll see how all this disruption plays out over time. I don't think anyone really knows. But the reality today is that multiples on all of the software space have come way, way down. And we think that it's not fair for many of the cybersecurity companies. And let me spend a little bit of time unpacking that, if that's okay with you guys. I think, first off, when we think about the coding tools that have been introduced and their applicability for cybersecurity, we think about maybe an analogy works. We were talking about letting the mice in the door or something like that. One of the things that I think Claude Code and maybe some of the other coding agents can do well is that they can scan your software that was written, and they can look for vulnerabilities. They can find the holes in the wall that might be able to more successfully keep the hackers out. But what they can't do, and they're not set up to do, is to monitor your cybersecurity, to respond to attacks, to recognize, what the sort of attack vectors have been historically. So we're talking about apples and oranges. There are a couple companies that just focus on sort of the area that could be disrupted by Claude Code, but most of the cybersecurity companies have much different services than are provided by some of these AI coding tools. Secondly, I think if you give too much credit to those coding tools, you are vastly underestimating the value of data. Cybersecurity companies have a tremendous amount of proprietary data on attacks and on ways to mitigate attacks that they have collected for many, many years. When you think about AI and what it's trained on publicly available data. Maybe it's trained on data that was available from a client or something like that, but it does not have the data that has been gathered by many of these cybersecurity companies over many, many years. And so it doesn't have the ability. The reason why it doesn't do what I was saying, where it's monitoring and responding to attacks, is because its training data doesn't allow for that. It's trained on publicly available data that it gets from the internet. And maybe there's some open source code that it's able to train on as well. But it doesn't have the same access to data. It doesn't have this proprietary data that, say, a CrowdStrike or one of these other cybersecurity firms does. But then third, and I think this might be one of the most important and overlooked points, and that is when we're thinking about cybersecurity, it's an area where failure is not tolerated. This isn't something where you can have a 2% failure rate. If I'm thinking about client relationship management software, where, if it doesn't work, well, an email doesn't go out to a client, the constant contact isn't there or something like that, maybe you can tolerate 2% failure. But when we're thinking about cybersecurity, even a 0.002% failure rate is much too high. That could be catastrophic for a company if you let a hacker into your organization. That is not tolerated. And so when you think about this from the perspective of your IT desk or someone thinking about how they're going to spend their IT budget, I think that the career risk for those professionals is too high for adoption to roll out anytime soon. I think if you're thinking about your chief information officer, why would they adopt some sort of AI program that isn't necessarily going to do a good job and try to do it themselves to save money? Because let's say it fails, well, their head is on the chopping block. right now they can, maybe they fire CrowdStrike and they hire SentinelOne or, Palo Alto or whatever it might be. They have that ability. And I think the incentives to take on that responsibility and rely on an unproven AI coding agent or something like that, I think we're miles and miles away from that. And so, as a result, when we look at some of these valuations, the sell-off that's happened, I tend to think it's overblown, and that investors are maybe getting a little bit ahead of themselves when they think about the potential for disruption, especially for those cybersecurity companies. So I know that was kind of a long-winded answer, but thanks for letting me kind of unpack it a bit.
No, I definitely buy into that too. I know personally, I use AI a lot, but to go and then use it as a CRM system, let alone to help me protect my, the security of my programs, my computers, my phones, right? I know that even with a CRM system, as soon as something goes wrong, I'm not going to know how to fix it. And it's not even that I won't even know how to fix it. I don't have the time or don't want to put the time in to figure it out, right? I would rather rely on, one of these companies to, pick up the phone, call the help desk and say, hey, here's the problem, and let them jump on my computer and fix it in 5 minutes, as opposed to me, flirting with ChatGPT for a couple hours trying to run every option down to figure out how to troubleshoot these things. It's almost, AI is a great addition, like the internet was to companies, but it's hard to imagine it as overtaking these companies that have built a big infrastructure of support systems and different levels of protection and overlooking how everything is working. It's hard to think that that's going to become meaningless one day just because of AI.
Completely agree.
You brought up the costs. I read somewhere that cybercrime costs are in like the trillions. Is that fair? So,
I've heard the same statistics. If you read through the internet enough, you'll come across, estimates of the value of cybercrimes in the trillions. I tend to look at those with a little bit skeptical eye. Directionally, they're definitely right. But the way you get to trillions is thinking about the potential for corporate espionage and the value of technology that might be stolen because of a hack or something like that. So you can definitely get there, but that's not like ongoing annual costs are in the trillions. Whatever the costs are, though, let's say they're in the hundreds of billions. The cost of cybersecurity is much less than the cost of a hack, a successful hack, and so it's in my opinion, it's a no-brainer for companies to spend on their cybersecurity.
That makes a lot of sense. I think you made a couple of great points there. I'm thinking about that in real life, right? If you're using AI as a kind of your cybersecurity, and it does more of like a scan, and it scans and everything looks good, and then a month later, no one's monitoring necessarily, and someone sneaks in undetected, that failure is real, right? And real life. So having that monitoring piece is huge. And then also to your point versus other software companies is there's really no room for failure, right? My father was an architect, and he has a famous saying he goes by that you measure 3 times and you cut once. And I think that relates to the cybersecurity space, probably 100 times that is you need to really be 100% sure that things are covered, but you're also monitoring that. So a couple of great points there.
Yeah, I think that's a great analogy. I mean, it really doesn't allow for failure when it comes to cybersecurity, and I think that is one of the things that marks it off as being different from other forms of software.
Sure. So people often think of infrastructure as bridges, power grids, and pipelines. How does cybersecurity fit in with modern infrastructure? Yeah,
well, I mean, we all sort of recognize that everything has become digitally interconnected, and infrastructure is no exception. And as a result, things have become more vulnerable. Thinking back to 2021, many people have sort of maybe blocked off that part of their memory for a number of reasons, COVID lockdowns and whatnot. But if you remember back in 2021, there was the Colonial Oil and Gas Pipeline that was hacked with a ransomware attack. I think there was maybe a $4 million ransom bill that had to be paid, and that disrupted the flow of oil and gas for quite a while. And so that's an example, that you end up shutting off the valves remotely because and you don't have the flow of oil and gas. Last year there was another interesting example of there was a dam in Norway where hackers breached the controls and were able to remotely open a water valve for several hours before it was able to kind of get under control. And, you think about that and the vulnerability of, let's say, a larger dam or somebody who really wanted to do some damage. The need for the power grid, for the water system, all of these things that are now digitally interconnected, that makes them more efficient. It makes it easier to manage. There's a lot of good that goes along with the technology. And so, you want that technology there. You can recognize, leaks in your water system or something like that much more efficiently. And so, net benefit is there. But when we think about the infrastructure and its connection to those networks and the ability for hackers to maybe to get in and do damage, it really does argue for the need to continue spending on cybersecurity related infrastructure. And that's one of those areas that I think many people kind of overlook. They think about how their own impact is as they're using their computer or their laptop, whatever industry you're in. But infrastructure is one of those areas where you really don't have your failure rate has to be zero, or else things could be catastrophic. And so I think that's another area where we're going to continue to see spending.
Yeah, no, that makes a lot of sense. It looks like we lost Austin temporarily. Hopefully he jumps back in. Maybe his cybersecurity was flashing a warning on his end. But that makes a lot of sense regarding the infrastructure, and that story from last year from Norway is super interesting, right? Again, bringing it to real life. And you think of cybersecurity, at least historically, I thought of it as like something virtual, right? It's going on virtual cyber attacks. To Austin's point, you watch movies and you see them pounding away, going back and forth. But then you see a real world example where, energy is halted and you can't get energy to people, or a dam is left wide open. And that's really, that's really not a good thing. So super interesting. Do you have any other kind of anecdotal or real world examples that you've seen over the past number of years? Because those are, I feel like, super relatable.
Yeah, I mean, there's all sorts of instances of infrastructure being disrupted because of cyber attacks. But I also think of, not other areas where cyber attacks have caused real damage. Earlier, Mark, we were talking about artificial intelligence. And, one of the things that I think is really interesting, and this was just, I think, in 2024, where hackers used AI to create a deepfake video. And they were on a call with, it was a UK company, so a company out of the United Kingdom. And they were on the call with staff and who they thought was the CFO of the company. And the CFO convinced the staff to transfer $25 million to cyber criminals because it, of course, wasn't the CFO. Right. It was the cyber criminals. And that was in 2024. And you think about the improvement that we've seen for AI and the ability to sort of create deepfake videos in a way that is, unrecognizable, even from just a couple of years ago. It really does raise the stakes when it comes to cybersecurity there as well.
Wow, that's fascinating. So do cybersecurity companies then, have they developed or developing like a mechanism or some way to I guess, filter through like videos or people trying to act as attackers, like in videos and things like that example, I would think, to try to screen whether it's real or fake.
Yeah. So I'm sure they are, but it's more about identity management. And I think, that example is interesting for a number of reasons. One of which is because, thinking back to 2024 seems like a long time ago. It certainly is a long time ago when it comes to the development of AI and all the capabilities with those videos.
Sure.
And I think what people would have trusted just 2 years ago compared to what they trust today has, at least hopefully, has been altered dramatically. But from a cybersecurity standpoint, it all comes down to identity management. And that is something that has been very important for many of these companies. Not necessarily recognizing a deepfake video attack or something like that, but verifying identities has been a very important topic.
Yeah, no, that's a great point. And we haven't touched on quantum computing at all. Something that's a little bit out of my realm, but I know is sometimes put in the same conversation with AI and cybersecurity. What are your thoughts on quantum computing? In relation to the cybersecurity space?
Yeah, quantum computing is fascinating because this is an area that very few people understand. But what they recognize is that it does threaten the cryptography of a lot of different sorts of applications, because typically the way cryptography works is that it's an algorithm that would take maybe years or hundreds of years or thousands of years to crack.
Right.
But with quantum computing, the ability to crack that code basically shrinks down to minutes. And so many companies, especially the cybersecurity companies that are tasked with managing your digital assets, are working on what they call post-quantum cryptography. Because you can't wait. You can't wait until quantum computing's here until you start thinking about how to respond to it. Companies need to make sure that they're ready for it for when it comes. And so this is an area, that a lot of these cybersecurity companies are already working on establishing, that post-quantum cryptography standards, so that they can have it in place. Even though, many people think quantum computing, maybe it's 5 or 10 years down the road. Who really knows? We'll kind of see when that is. There's some things that are out there now, but kind of more widespread. Doesn't seem like it's going to be until 5 or 10 years. But even in that case, you think about encrypted data that could be stolen. And right now, a hacker comes in and they steal encrypted data and they can't do anything with it. Maybe they can just kind of set it aside and store it. But once they have abilities using, quantum computing, maybe they can then go back and use that to decrypt the data with their quantum computing. And so, again, this isn't something that's, even though quantum computing's down the road, it's something that companies already have to prepare for. And from an investment standpoint, I think about that as providing one of those critical moats or competitive advantages for these companies that also, I think, help protect them from being disrupted from some of the AI that we've been talking about today.
Sure. I would imagine that there is a lot of government and large company money invested in figuring out that piece of the puzzle before the quote unquote bad actors, the bad guys, do.
Yeah, absolutely. And there's government money. I'm sure there's government programs that none of us are privy to, but there's definitely the trade agencies or the trade groups are focused on establishing what they call post-quantum encryption standards. So, right now there's encryption standards that are sort of just, that have been developed that if you want to, be recognized as having your cybersecurity aligned with something that's actually going to be protective, these are the standards you need to meet. And so now what they're working on is focusing on these post-quantum encryption standards. And there's already been some success in developing what those standards are. The great thing about it is there's competition that happens when you sort of recognize the problem down the road and you say, okay, you sort of free up the computer nerds to go after it, and they do. And there's competition in terms of solving those problems. And so, yeah, I think that's a great thing that will continue to play out over the next several years.
So we talked about the opportunity within cybersecurity and the room for improvement, which perhaps creates a competitive edge for them. How do investors get exposure to cybersecurity type companies? If let's say they own the S&P 500, how much exposure do they really have to cybersecurity within that index?
Yeah, that's a really good point, because a lot of times we think all you really need to do is buy the S&P 500 and you kind of get exposure to everything. And that has become, I think, over the years, it has become less and less the case as the overall market has become more concentrated at the top. Now the largest companies in the US markets now dominate that index. But also we think about an industry like cybersecurity, and say you're comparing, the NASDAQ CTA cybersecurity index, which we think of as sort of the gold standard for cybersecurity, to the S&P 500 index. What you find is the holdings in that cybersecurity index only represent about 3.5% of the S&P 500. So you do get a little bit of exposure to the cybersecurity industry if you just buy the S&P 500. But I think it's probably less than most investors would expect. And so, I think targeting that specific area is something that's been very popular. Of course, I'm an ETF strategist. First Trust has ETFs. We do have an ETF that tracks that specific index. And there are others out there as well. But I think, kind of carving out a part of an investment portfolio for something that isn't in a broad index, I think is something that many investors have done over the last several years.
So I would imagine, I think you alluded to it, that you don't get too much exposure if you're just holding the S&P 500 within that cyber realm. Is that because it's because these companies aren't that big? I'm assuming that's because these companies aren't that big. A fair share of them are probably mid cap, small cap in terms of their market cap weighting. Is that because of how new they are? They're more like a startup company at this point, or is that because they kind of hit their potential? You think we'll ever see, for example, a cybersecurity as a top 10 name in the S&P 500?
Well, that's a good question. I think companies in the S&P 500 at the top of the index today have gotten so large, looking at $1 trillion plus market caps. Could we see, some of the larger cybersecurity players get into that tier of size? Never say never. It's certainly possible. I also think it's possible that we see some of those mega cap technology companies make acquisitions, and we've already seen that of some of the cybersecurity companies, and so they're kind of pulling them up as part of their business. In terms of why they don't represent a bigger part of the index, it's not necessarily because they're new startups or anything like that. The S&P does have certain requirements with respect to earnings, and you have to have earnings for a certain period of time. And when you look at many of the cybersecurity companies, many of them are profitable, but they're reinvesting. They're plowing a lot of their revenue back into the development of their resources and growing their businesses. They are still scaling up and becoming larger and larger. And so, their earnings, they're not necessarily focused on maximizing earnings at this stage of their growth. They're focused on, developing their resources and growing. And so I think that's part of why maybe some of the companies haven't been added to the S&P 500. And of course, as I was mentioning, the other big part of it is the S&P 500 has become so top heavy. It's, those multi-trillion-dollar companies represent a big percentage of that index. and it's sort of everything goes down from there. And again, those multi-trillion-dollar companies at the top, they're fantastic companies. No one would deny that. But they do tend to, because they represent such a large part of the index, they make everything else a smaller part of the index.
Sure. Yeah, it's interesting because you think about the potential and what cybersecurity companies have to offer, and it feels like the upside's limitless. What's at stake for these large companies, and you would think that for each large company out there, there would need to be some sort of cybersecurity company or companies, right, supporting that and growing as they grow, right? It makes you wonder, will we eventually see a top 10 company being a cybersecurity company? I know traditional defense companies almost never break into the top 10 companies in the S&P 500. I think Lockheed Martin did several decades ago. But that scale, and I guess, you make a good argument. They're busy reinvesting in themselves, and who could bat an eye or who could turn a shoulder to not being as profitable because you're saving the world, or protecting the world at least. But it's interesting to see how this all evolves, and how cybersecurity ends up playing a role in the bigger investable marketplace.
Yeah, absolutely. And I do think that it's an area where you could see some, potentially some M&A activity, some mergers and acquisitions where, the larger technology companies recognize that value and make strategic acquisitions. So we'll see how that plays out. But it's funny you mentioned the defense companies. With the proposed $1.5 trillion budget from the Trump administration, who knows if those companies will continue to do well as a result. Again, it's difficult to say what the opportunity set for some of these companies is. But we'll see. That's what makes a market, I guess.
Sure. Do you think cybersecurity will become its own GICS sector one day?
Probably not. I don't want to say never. I think it's maybe an industry within the technology sector. Mm-hmm. There's a lot of different industries. I could see maybe a carve out from what it is right now. It kind of falls underneath the technology and then software, and it kind of falls underneath that. Maybe it could have its own designation at some point where it's a little bit more carved out. But I don't think it's something where it's a form of technology. So I don't necessarily think it would kind of get its own carve out apart from technology.
Sure. Yeah, it'll be interesting to see. I feel like within like the S&P 500, for example, technology just keeps becoming a greater share of the pie, so that they slice off an industry and they make it a new sector, right? Like communications and other times. It makes you wonder, is the technology sector going to look like the technology sector today in 15, 25 years? Or will it be broken up? Because it seems like that's where a lot of the newer companies and the bigger companies are really shining. And I know a lot of these companies are focused on making sure their indices are diversified so that when an ETF comes in to replicate it, right, it meets all the criteria it needs to meet and everything like that. So it'll be interesting to see what happens there.
Yeah. And you know what, your point about the technology sector in 10 or 15 or 20 years from now, the one thing I do have pretty high conviction on is that it will be much different than it is today. And I can't really tell you how it'll be different. But I do, looking at technology over the last couple of decades, it's certainly much different today than it was 2 decades ago. And based on the technological development coming from AI and from other sources, I think we're going to see some pretty amazing things over the next couple decades.
Sure. Do you think the conflict with Iran and maybe some of the other geopolitical tensions going on right now, do you think that's a strong catalyst for owning cybersecurity within your portfolio? Or do you think that's more noise, but surrounded by a bigger theme that points to cybersecurity working out in the long run?
Yeah, that's a really good question. The way that I look at that would be, is anyone going to actually increase or decrease their spending on cybersecurity as a customer as a result of the conflict in Iran or other geopolitical stressors?
Right.
And I don't think we're at a point now where behavior is going to change. I don't think anyone's going to really cut their cybersecurity spending. I don't think that necessarily, if anything, people would increase their cybersecurity spending.
Sure.
Or become, maybe there's, the way software typically works is, you can have different levels of once you've got a subscription, different levels. And I could see maybe able to add some features that maybe you didn't think were as important. So I could see some increased spending. But where I think maybe you have an opportunity is more of a sentiment standpoint. Mm-hmm. Today, when we look at valuations for cybersecurity stocks, they're trading below the multiple for the S&P 500. And I think that's rarely happened. And so, the reason is not because they've done, fundamentals have deteriorated or revenue or earnings have deteriorated. A lot of it is people extrapolating their fears about the software industry and applying it to cybersecurity, kind of like we've been talking about. And so I do think from a sentiment standpoint, from an investor standpoint, we could see some multiple expansion as a result of people starting to think through, well, hold on, this is a really important part of modern warfare, of fears of maybe a potential cyber attack coming from Iran or from somewhere else. We tend to see performance from the cybersecurity stocks improve surrounding any of those sorts of events. In fact, we wrote a piece a few years ago that looked at it was after the Colonial or the Colonial oil and gas pipeline had been hacked. When you see these big events, you tend to see outperformance in the wake of that from cybersecurity stocks, because people it kind of enters their consciousness. They start thinking about it more. And so given that valuations are relatively low today, I do think that the performance of these stocks could be boosted from a sentiment standpoint. And you could see some multiple expansion.
Right. And I know we talked about the S&P 500 and, not having a strong ownership of cybersecurity type names. But I think people would also be surprised some of the names that fall into a cybersecurity index, like Cisco or Broadcom. Trying to think if there's any others that kind of jump off as I look through this index here. But you get a lot of people focusing on one or two names, and I think that they don't realize that there's some of these bigger technology companies that also have their hand in the pie as well. So I think before anyone goes out and just starts indiscriminately buying one of these well-known, like a Palo Alto or a CrowdStrike, to really understand what you own first, and then how you want to get exposure to it. We find that in emerging technologies like this, if you can even call it emerging, but I think I could still put it in that bucket, given the market cap size and what they're doing and the amount that they're investing in themselves. We find that buying a basket is often the best approach, because it's not, you don't want to be correct in this theme is going to be a good 10-year theme, but be wrong in the handful of stocks you picked. It's better to own the basket and let the market cap weighting system and the index system for weighting these names do the hard work for you.
Yeah, I think that makes a ton of sense, and we see many examples over even the last few years of one stock getting punished in the wake of a mistake or something that they have done wrong, whether it's a hack got through. Sure. Or you may remember from a few years ago, the company CrowdStrike had a software update that they pushed to all their customers. It was a couple summers ago, and anyone that was operating on the Windows operating software, their screens went blue, and it caused a lot of downstream impact on flights being canceled and major airports. And it was a big news story at the time. And you saw a pretty significant sell-off in CrowdStrike in the wake of that. But the interesting part was, if you looked at some of the other companies in the space, they actually improved. They outperformed during the same period, because I think people sort of understand that you have to spend. You may want to fire, I don't want to pick on CrowdStrike, they're a great company as well, but let's say you fired CrowdStrike. It's not like you're going to do it yourself. You're going to hire Palo Alto or SentinelOne or one of these other companies, because you have to hire somebody. And so, I think that argues in favor of the basket as well, because there's things that happen that just happen. Nobody is perfect, and these companies, they're doing battle with the hackers, and there's going to be vulnerabilities that get unfortunately there's failure points.
Sure.
And so that tends to benefit the other companies in our portfolio. So over time, it smooths out the volatility, and you don't have to necessarily pick the best company, insulated from the risk of picking the worst company. And we think that basket approach, where you're getting the whole cross section, really can add value. Especially, we work with, as I mentioned, the NASDAQ CTA Cybersecurity Index. We think it's the gold standard because responsible for selecting the stocks, we are able to leverage the insights of the CTA, the Consumer Technology Association, which is the largest technology trade group in North America. So they have insight into what these companies are actually doing beyond what maybe the financial reporting says. They have the biggest trade show. The Consumer Technology Association does the CES, the Consumer Electronics Show, every January in Las Vegas. And so they're able to see what's coming, what these companies are doing, what they're most excited about, and they can incorporate those insights into the way that they select the index that ultimately our firm uses to we track for our ETF.
Yeah, that's a good point. And I would imagine a fair amount of that headline risk that you mentioned of having a mistake that I would imagine amounts to a fair amount of bad luck, as opposed to a mismanagement of the company, which further supports owning a basket and not trying to concentrate in any one name.
Completely agree.
So Ryan, before we let you go, we always like to end these conversations on a more personal note. When you're not talking about cybersecurity and the markets, what are you doing? Anything recently you've been enjoying? A show, a trip, time with family?
Yeah. So, well, one of the things that I do for my job is I kind of travel around the world and get to speak on behalf of my firm to financial professionals all over. I just got home from Tokyo and had a road show over there. I was in South America earlier this year. I'm headed to Europe in a few weeks. So this will be in the first half of 2026. I'll be on 4 continents, which is pretty cool, pretty fun. So when I'm not doing that, though, I've got 3 kids in high school. And, nothing better than chasing your kids around and trying to help them figure out what's next. I've got one of my oldest daughter is headed to college next year.
Awesome.
So we're trying to figure that out. And then I've got a junior right behind her. So, life is busy. Very
nice. Are they working on a path towards ETF strategist?
My daughter is going to be a teacher, I think.
Very nice.
And, we'll see I have 4 kids. So maybe one of the 4 will end up in the, or maybe more, in the ETF industry. Fingers crossed.
Very nice. Very nice. And you must have some great airplane status with all that traveling.
I do.
Yeah. Not to brag. I have to get the credit card in order to get the status. I have to cheat. But Ryan, I really appreciate you joining us today and sharing your perspective. And to everyone listening, thank you for tuning into Amplified Wealth. If you enjoyed today's conversation, be sure to subscribe. I've been told to point down because that's where the buttons are. And share the episode with someone who might find it helpful. And we'll see you next time. Thank you.